Now today, which is the most important topic for today, which is external market structure and internal market structure. Now, please pay close attention because this external market structure and internal market structure now I'm about to explain, at least you will get to know how to analyze, maybe get that vision, get that mindset of where the market is heading to, when to stop buying, when not to stop buying, when to stop selling, understand? Buyers, it at least we give you hints on how to get your buyers here. Now, talking about external market structure, internal market structure, and you guys should stop using lower time frame to analyze. See how I do analyze. I analyze in bigger time frame and find my entries in lower time frame. And what do I mean by that is that lower higher time frame give me where the market is going to, the buyers and everything. Then I follow it up in lower time frame. Now talking about external market structure, internal market structure. For example, we have things like this. Always use your bigger time frame. Now we have things like this now. For example, I call this external high, and external low, which are the external structure I'm talking about. External high also, external high and external low, external high, so and external low. And the question should be, where is the internal structures? Where are the internal structures located? Now, internal structures is located inside the internal structures is located inside the external structure. Now, if you check your chart whereby you go lower bigger time frame, check these highs, check these lows, and all that. If you go lower time frame, you can actually be seeing structures like this breaking inside the lower time frame. So these are the internal structures I'm talking about. Internal structures. So these structures inside there is called internal structures, and there are things you should avoid while analyzing, while taking your trade. Now, most of you all know, everybody, I think, yeah, this is not beginner class, know about change of character. Change of character is basically like market moving, like changing direction. For example, market moving up, all of a sudden change character. So this is like a shift. For those of you call it market structure shift, MSS, and some call it change of character. It is the same thing, don't get confused. So change of character, then market change direction, so they're moving down. This is basically like simple stuff, you understand? So, but here now, we have two different types of change of character. It's the same thing, but they are the ones you need to avoid. We have minor change of character, and major change of character. Please don't get confused. Now, minor change of characters are the ones you need to avoid. And why do I say minor change of character is the one you need to avoid? Minor change of character is located inside the internal structures. I will explain that more. But the major change of character is when market shift an external low or external high. It's a major change of character. That one is simple. But now let me explain about this particular minor change of character and internal structure, and why you should avoid them. And I believe some of you have experienced something like you have a setup and change market change character, then all of a sudden you want to start selling, then market stop you out. So this change of character now is basically an internal structure. You find it inside internal structure whereby, for example, when I do analyze now, for example, now let me show you. I will show you examples in the chart. Let me just come. This is an external high. And when external high is being created or external low is being created, depending on the trend, for example, uptrend, market is uptrend and this external high has been created, your next expectation is the market will go up and take out this high. Your next expectation is the market will go up and take out this external high, right? So now in lower time frame, for example, now you're putting this expectation in bigger time frame and you are trading with the lower time frame to take it out. Now in lower time frame, we'll be giving you these particular structures. So all of a sudden, you can actually see a change of character. That's why I said the change of character is located inside, the minor change of character is located inside the internal structures. So Any change of character you find inside internal structures, you should not pay much close attention to it. Like try using it because now, for example, if you want to take the sell, you are going against the trend whereby market is uptrend, trying to take out this high and this like grabbing liquidities, but still a change of character. Many people will try to like sell, all of a sudden the market will go up. Another change of character can actually happen, sell, then started going up again. These are the normal market structure movement. Those change of character is found inside internal structures. As I said, if you use your bigger time frame, you will get to know what I mean. For example, when you have a bigger time frame structure, and when you analyze with bigger time frame, you find your high. I'm telling you how to analyze now. You look for your highs and then you see your high, which market is trying to push the high up, which is the external structure. Now in lower time frame, these are the structures, normal market structure market will keep giving you. So this change of character you see inside this lower time frame is not really valid. Those are like grabbing liquidity and start moving up, moving each way. Then this like grabbing liquidity will give like more sellers to enter the market. Things like this can actually happen. Retracement started going up. That's why in some cases whereby you see a change of character, all of a sudden you see a change of character, all of a sudden markets liquidate you. So this is like you getting this change of character inside the internal structure, which is basically wrong. You understand? Once you have gotten that, you have gotten um that high, your expectation now is market is going up to take out this external high. So on no account whereby market will keep giving up, going up like this and give you a change of character and you want to start selling down. That's actually wrong. This fall is like grabbing liquidity. What you should do is just to go and look for a zone down like liquidity the market wants to grab. I will explain more in the next class about liquidity. I'm not talking about liquidity today. So I'm talking about market structure on a whole. So this change of character is what I'm trying to explain to you guys. The change of character you need to avoid. Those minor change of character, those change of character is normally seen in lower time frame, which is internal. You find the change of character inside the internal structures is the one you basically need to avoid. You understand? So those change of character is like a trap because in some cases whereby you see a change of character in a supply zone when market is uptrend, you see market respecting your change of your other block. Just as if you want to sell, all of a sudden buy something like that happening, go too much. Let me at least let me explain more in chat. Let me explain more in chat. Let me explain more in chat. So basically, you can see what happened here. Market is uptrend now. This is good. Let me delete. This is good. Let me open 2 hours. This is good here. It's like a POI here. Market mitigated. Now, understand that this is a retracement back to the other block. And we have this high, which is the external high. Now I'm telling you, talking about. Now, when market reached to this zone, and I saw many people selling down from particular other block, but I didn't sell. I was actually buying. Sorry, because I know the market is uptrend. And this is like external high. I know the market will go up to take out this external high. So on no account, let me show you. So on no account, you should start looking for sell. Now, for example, you can see a change of character here. And this is a normal change of character. That's why I said avoid those change of character you see in lower time frame, which is the minor change of character. Now, I've gotten my expectation in bigger time frame, which is bullish. All I should look for now is like a particular pattern we use in trading, which I'll explain more in the next class. I'll combine structure, liquidity, then we know how to like use this particular liquidity to trade. But today, now this particular, you can see this high and you can see this low. Market went straight up and gave a change of character, shifted this zone. Change of character. Now many people will be like, let's start selling from this zone, and you can actually see like a reaction from here, from another block here. But all of a sudden, the market went straight up. Then if you check here also, you can see that this is a low. Market shifted this zone, and many people will be like, let's start selling from this zone. Let's start selling from this zone. All of a sudden, trying to take these lows out, market went straight up. So this is what I mean by avoid this type of change of character. Once you have gotten your expectation, which means the market is bullish, all you should do is to look for setups for bullish trend. Or no account, you should start looking for sales. So you can check here, all this is like a normal change of character. Everything here is change of character, but you are in a wrong trend and market is bullish in a higher time frame, which means in lower time frame, all you should be looking at for, you can see the reaction from here. Just if want to all of a sudden market went straight up there. So all you should do is to just start looking for bullish market, bullish trend. Now, here also, market was actually bullish, like I said. And you can see the high and the low here. Market went straight up. Then change of character. Now, yeah, when this thing happened, I saw many of you selling down from here. You can check a market just as if you want to sell. All of a sudden, boom, buy. Then market will start moving. Yeah, market start moving this way. Understand? This particular trade, I was actually buying from here. Let me check if I can see the setup. Can see the setup. Good. You can see this. The second buy was from here. This second buy, I've deleted just so that my chat can look neat. And this is good. You can see everything I was doing was just bullish trend. I was just buying, 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 buying. So that's what I'm saying. This that particular set I showed you was around here now. I took buys instead of looking for sales. That's what I mean. If market is bullish, you should be buying. And those change of character now, for example, now another change of character happened here. Another change of character happened here. And market is still bullish. So on no account now, you should start looking for sales. Like I said, this is a minor change of characters which you need to avoid. Once you understand structure, market wanted to sell, all of a sudden, boom, buy. So once you understand this particular structure, whereby you go bigger time frame, that's how we got the buyers. Especially, I'll teach more of that. Now, for example, market is bullish. Market is bullish. This is an external high, and market wants to take out this external high. Note that this is a bigger time frame. Now, in lower time frame, we've seen structures like this, which is internal structures trying to take out the high. All of a sudden, sell. So this is like grabbing liquidity to continue its way. Also, you can see. Then come back again, another change of character, which is the grabbing of liquidity. Pick up your and started buying also. So this is like a normal thing market do. You understand? So don't actually like fall into victim of you see change of character and you start shivering or you want to start selling down. It's like a normal change. This is like the change of character that happen inside the internal structures, which I told you guys to avoid. You understand? So these are the minor change of character which you are not to avoid. And what do I mean by external change of character now? It's one market shift and now let me show you examples of what I mean by this particular external and everything. Um Let me use USD as example. Now I had to go to a bigger time frame. If you go a bigger time frame, you get this particular um structures correctly. As I said, you should make use of a bigger time frame. Now, many of you will be asking me which time frame, basically which time frame do I use or something like that. I don't have a specific time frame I use, and I will teach you guys how to do that. Uh, the now, for example, here now, if you watch here, we have this particular high and this particular low here. Now, if you go lower time, let me show you what happened in lower time frame. Let me check 4 hours. Now, if you watch inside here, you can see many structures happen inside here. Now, when market was actually selling down, market was just selling, just selling down. Understand? Normal market structure. Now, market was going up. The highs, lows, the high, another low, then another low here, another low here, another low here. Market went straight up. Now, market shifted this zone. Now, market shifted this zone here. Now, let me tell you why market shifted this particular zone. This is like a change of character now. And many of you will be like, let's start selling from here, or something like that. No, the market is respecting this particular demand zone. That's why this shift happened. So this is like giving shift, giving the sellers more courage to enter the market. And note what I said. I told you guys, once you have marked out that particular high, the market is trying to take out. Always respect the trend. So all these pullbacks now is like grabbing liquidity for the initial buy. If you understand well, I'll teach more about the particular pattern and took buy from here and start buying also. Then if you check here too, there is this particular change of character that happened here. This low, another low here. Market shifted. This is bigger time frame, but market is still uptrend. Market was actually going up. So if you go more lower times, you see that there are many change of character that happens here, but market is still bullish. You understand? That's why I said once you have gotten that expectation now in bigger time frame, which I use like my time frame that I use is always big to get everything that is happening here. So, like I said, the change of character which you should care about is the major is the major change of character. And what do I mean by major change of character? You can see that I marked out the external low here, and this is the external high. And what market did, market shifted the external low. And after shifting the external low now, what do we expect? Respecting the other block and start selling. And you can see the market was actually selling down. And expecting that this particular USD GPY will take out this low, which is normal structure, whereby market will give a change of character. And you understand? Something like this. Yeah. So I think there should be questions now, room for questions. If you want to ask question, raise your hand. Yeah, to raise your hand. There is this thing option for that. C7. Raise your hand, unmute your mic and ask the question. C7.
Hi. Yeah, I'm here. Now my question is that I want to ask about the external and the internal change of character.
Mm.
From what time frame can we say that we can look into the external change of character from like what time frame?
That's why I said I don't have a specific time frame. See, what you do is to go like a bigger time frame, more the biggest time frame. To now, for example, now I went on this bigger time frame. There is no other time frame that we like open something else. You understand? This is the biggest time frame, like not the bigger, but you're actually seeing everything that's happening here now. You understand? Unlike you opening 4 hours, you are not seeing the everything. I don't know if you get. Now you have to open a time frame that is showing you everything that is playing the chart for it to get the proper movement on the market. Understand? Do that time frame you open, you get to see the things, everything that have happened in the chart. You understand? So that you can actually mark the next move the market will actually do, or the place the market wants to react or something like that. You understand? I don't know if you get me. Because if I'm marking the four, if I open 4 hours now, I will not actually see this change of character that happened there for me to know that this is a change of character that happened for external loan, shifted external loan, and looking for a sell. I won't actually know. You understand? So you have to open this particular time frame that will show you it, everything. Then you look for the movement of the market, know where the market is heading to, some things like that. I don't know if you understand.
I understand. Thank you.
Okay, another person, please. This guy, Kenechukwu, you raised your hand before. Unmute and ask the question.
Mm, it's about
Ask the
it's about that same thing you guys asked me. Like you said, when analyzing your chart, that if the higher time frame is like bearish, like when you come down to like our lower time frame, like let me see 30, 15 minutes time frame, and you see like change of character and hitting another block. Does it mean that if like all the criteria you need to take that trade, if it's there, you take the trade went
See,
against you,
please,
does it
please,
mean
please,
that
wait. Wait, your voice is doing something. I'm not actually hearing you. Please raise up, like, speak loud. Looks
okay, I
like
say
you're.
that
Mm-hmm.
I hear me.
I hear you. I'm hearing you.
I say that like when in higher time frame, mm, like
Mm-hmm.
the price is like bullish. So
Mm-hmm.
you come down to a lower time frame, now see something like bearish movements. Like let me see, you see your other block there, PDT and reducement, every criteria needed to take it trade. And you now take the trade now went like against you. What causes it? Like what's wrong there?
I'm trying to get your question. Do you mean by when market is bullish and you went on lower time frame, which is 30 minutes time frame, and you
Yeah,
see a change of character, right?
yeah,
You change of character for sell, right?
yeah, yeah,
And once
yeah,
you take the sell, you
yes,
get stopped out.
yes,
That's the same thing I'm talking about. Those change of character now, for example, you got your setup, you went on higher time from market is bullish, went on higher time from
yeah,
market is bullish, and now um you went on lower time frame, which is 30 minutes time frame. Market is giving you change of character for you to sell. That's what
yeah.
I'm saying. That's like a liquidity grab or something like trap. You understand? Those traps, something like this now. Let me give you an example. Market is bullish. Let me give you an example. If I
Okay.
yeah, for example, something like this, you got to set up. Market is bullish now. Trying to take out this high in lower time frame now. Once market is trying to now you saw a change of card like this, and you're trying to sell all of a sudden market to cure. That's the same thing I'm trying to explain. These are the minor change of characters you need to avoid. So when market is bullish, these reversals that happens like liquidity grabs for me. So what I do is always
Mm,
like go another time frame to see if there is a zone that is more mitigated for me to take. I'll explain more because this particular is like me going to the next class, which is talking about liquidity and how to use it. So now this is like going down, grabbing liquidity. But now many people consider it as a change of character, which I don't consider it as a change of character. That's why I call it a minor change of character. You understand? So market is still
yeah,
bullish. This is like giving the sellers more opportunity to enter, then liquidate them. You understand? So any change of character, basically, you went on high time frame, got your set, your bias or your setup, and you're trying to buy. lower time frame, which is actually correct, and you're seeing change of characters. So that's actually like traps. I don't know if you get.
Yeah, I understand. Thank you.
You remove your hand so that another person. Um, Ugochukwu, Ugonna, please unmute.
Serious. Yeah.
I can hear you. I can hear you.
I wanted to ask if the change of character must it be like a week or candle, like must it be a candle change of
A,
character
ch-
or can it be a week?
a change of character is just like a change of character is not. It's not a week. It's not both of them because you can actually see a week in higher time frame. If you go in lower time frame, it's a body. You understand? But just be on the right trend. Be on the right trend because if you're on the wrong trend and market is giving you like a change of character in lower time frame, whether week or body, is like a liquidity grab for me. But when market is uptrend and even if it's weak, I consider it as a change of character. You understand? I don't know if you get.
Yeah,
Yeah.
I get.
So the week and the body is correct, but based on the just be on the right trend, market will respect you. This guy, wait. This zone will end in 10 minutes. I'll send another link. You guys should join fast to avoid maybe the people that are here is not more here again to start asking me questions that don't really. G trader, G
Okay,
trader.
okay, I'm here. My
Okay.
question is that there is a time that market will create like a high and a low, given an uptrend. A market creates a liquidity, the first break of structure, and they didn't take out the other block of the first order higher high.
Please,
Then
please,
create
please,
another.
please. Wait, excuse. Please, any question you are asking me, everybody, please, any question you are asking me should be something we are talking about today. Not ask me about liquidity or something we have not talked about. Any question you are asking me should be about market structure, everything I explained. If you understand, ask it. I don't know if you understand.
You
To
understand?
so continue.
What I'm trying to say is that if market creates a high
Mm-hmm.
and didn't mitigate the high that is created with the other block that you said, and it create another high, is it a must that the market must go back to the first high it created before it moves up, or it respect the second high?
I want to get what you mean by create another high. I want to get. You mean something like this? You mean something like this? How do I draw this thing? Please repeat your question.
Yes, let's say the market is in an uptrend now. It creates the first high.
Mm-hmm. The first high. Mm-hmm.
There will be another block at that point where you said the market will come back before pushing up.
The other block
Yes,
at the supply zone.
yes.
Mm-hmm.
And it didn't come back to the other block. It creates another
Come
high.
back, come back to the other block. Like I don't get. Come back to this other block.
No, like when the market creates a higher high and a higher low.
A, a high high and a higher low. Like this.
Yes, something like this with a higher low.
And this is the high high and this is the high low now.
Yes. Now you know
Mm-hmm.
that you said the market will come back before
Come
pulling
back.
up.
Come back here
Yes.
before
But
pulling
what
up.
if yes, like what you said
Mm-hmm.
that the market will come back to another block before going up. What if the market did not come back and it creates another high? Will
No,
it come
see,
back?
I didn't mention of coming back to a particular other block before going up. I didn't say something like that. See what I mean by going up then reversing to continue another thing. It's not more as the market will come back to this particular zone. This is like before. Now let me explain. They are trying to drag me into liquidity aspect. Now, something like this always happen. Naturally happen. Something like this. This is the liquidity the market created from here. Then go up, come back. We'll be like taking out this liquidity. Not more that will come back to this low, then go up again. You understand? So this is like what
Yeah.
market will do always. So it's not more that market will come back to. But I will talk about the next class, which is the liquidity. Then you understand why.
Okay,
Another
thank you.
person, please. I will send. Let me send another link. Let me send another link. And if I'm sending link now, everybody should join immediately because once is 95 people, I will delete